For financial professionals, tax season used to be a logistical nightmare of sheer volume. Offices were buried under W-2s, 1099s, and 1040 schedules, with highly trained staff spending their days manually sorting and typing numbers from paper into databases. This chart highlights exactly how time allocation has flipped. In the past, 60% of compliance work was purely manual data entry. Today, the 2026 standard dictates that 80% of that workload is handled by AI-assisted diagnostics, leaving human professionals to focus on review and strategy. But that efficiency creates a new problem. The market is completely flooded. From basic chatbots to highly specialized parsing algorithms, there are hundreds of options claiming to automate your workflow. Plugging the wrong architecture into your practice carries severe consequences. If a system misreads a tax code, you generate hallucinated liabilities. If you feed client financials into an unsecured public model, you trigger a massive data leak. You no longer have to decide whether you should adopt AI. The only decision you have to make now is which specific architecture safely balances your need for speed with your requirement for privacy. To cut through the noise, we have to look at this segment checklist. The entire 2026 tax landscape neatly divides into 3 operational profiles: the DIYer, the practitioner, and the enterprise. Every single one of these groups has to navigate the exact same trade-off. You can have frictionless, out-of-the-box capability, or you can have absolute data sovereignty. You just cannot have both. Defaulting to a generic consumer-grade language model to process regulated financial tasks is a massive liability. Those models ingest your inputs to train future versions, meaning your client's confidential balance sheet could surface in someone else's prompt response. Knowing your exact operational tier is the only strategic way to select your tech stack. It protects you from buying tools that are either too weak to trust or too complex to deploy. Let's start with Tier 1, the DIY individual and the freelancer. These are budget-conscious taxpayers who prioritize getting a maximum refund quickly over maintaining strict technical control of their data. The recommended architecture here is the Consumer Cloud AI platform. These are intuitive, self-service portals heavily optimized for ease of use. To use them, you have to provide mandatory inputs. You are required to upload your Form 16s, W-2s, and crypto trading ledgers directly into their cloud servers. The immediate benefit is speed. The AI instantly parses those documents, automatically compares old versus new tax regimes, and flags potential deductions in seconds. The trade-off for this level of convenience is total data surrender. You are handing your financial sovereignty over to a third-party server operating within a closed ecosystem. Consumer Cloud AI is highly efficient if you have a standard individual return, but if you have complex, edge-case corporate structures, these platforms lack the nuance and security you need. Tier 2 covers solo practitioners and mid-sized accounting firms. These are professionals dealing with hundreds of W-2s, 1040s, and GST forms, while they constantly research evolving regulatory compliance. The mandatory architecture for this group is domain-specific cloud SaaS. These tools are trained specifically on tax code, financial parsing, and legal precedents. Deploying these tools require monthly subscription overhead, and you have to integrate their APIs with your existing accounting software to make the data flow. This quadrant chart maps effort against data control. Domain-specific SaaS lands cleanly in the low-effort, moderate privacy sector, reducing manual extraction workloads by 70%. The risk is relying completely on that vendor. If their server drops, your firm halts. Domain-specific SaaS is non-negotiable if you want to survive the volume of the 2026 tax season. You just have to rigorously audit your vendor's data processing agreements before you upload a single client file. Tier 3 is Enterprise Finance. This covers organizations handling wealth management, mergers and acquisitions, and highly sensitive audits that invite extreme regulatory scrutiny. The ultimate privacy architecture for this tier relies on local LLMs and internal orchestration platforms. These systems do not ping external cloud APIs at all. Building this requires steep physical inputs. You need massive upfront capital to purchase the local inference rigs and silicon required to run these models on-premise. You also need dedicated IT talent. Humans have to orchestrate the models, construct custom agentic workflows, and manually push compliance updates to the system. The reward for this heavy lifting is 100% data privacy. Proprietary financial data never leaves your physical device, and you pay zero recurring subscription costs for inference. The trade-off is extreme technical friction. Your internal team carries the entire burden of keeping the hardware running and preventing the model's accuracy from drifting over time. For enterprise finance, achieving absolute data sovereignty is the only metric that matters. It justifies the extreme hardware costs and maintenance headaches of localized AI. There is no single perfect AI tool for finance. There is only the correct architecture for your specific level of risk tolerance. We can map these options using this decision scorecard. For the DIYer, the recommended stack is Consumer Cloud AI. It saves hours of time, but you risk uploading data to a public server. For the solo to mid-sized practitioner, the stack is domain-specific SaaS. You gain massive extraction efficiency, but accept a high reliance on external vendors. For the enterprise, the stack is Local LLMs. You secure absolute data sovereignty, but accept the high technical friction of maintaining your own hardware. Look past the marketing hype promising zero-touch automated accounting. Look closely at the data governance reality of the tools you are evaluating. Identify your tier, accept the mandatory trade-offs, and implement your 2026 AI stack systematically.